Hello guys, welcome to the Trading Parrot. Bitcoin has reached the top of the range on the 4-hour time frame momentum. On the daily, we have accumulated a bunch of patterns that are bearish and are still in play potentially. Bears are piling up on the top, forming a massive selling wall that we haven't seen in around 6 months in the past. Are they going to get really away with preventing the weekly breakout, or are we about to ignite the biggest short squeeze liquidation ever? That's precisely what we are going to cover today's video. Remember that we just released the altcoins chasing Bitcoin. That's an elite video that went public to everyone for free, and you can watch it right now. We edit the video from over an hour of live TA into just 46 minutes. There is timestamps, so you can skip straight into the coin or stock that you want to watch, or just watch it all over. I'm sure you're gonna learn a bunch of things. Guys, a couple of days ago, I just released this new promotion with Bluffing Exchange. They're currently giving away iPhone 17s. All you have to do is open an account with the link in the description for the exchange Bluffing. Remember that this, guys, KYC is optional. Any trading volume will give you a reward. Of course, the largest volume will get an iPhone 17. Biggest news today is, well, of course, we got a sustained inflow into the spots ETF. I think it was around 600 million, actually 600 on the 2nd of October. We'll see how we close on Friday. We are about to close a full week in the green, and we are at all-time highs in cumulative flows for Bitcoin and Ethereum. Although I have to say that Bitcoin has been taking the lead in terms of inflow sizes, which hasn't always been the case. At some point, Ethereum was taking the lead, which we always interpret as the risk on is even more intense. Over 4.3 billion in BTC Ethereum options expired today. BTC max pains is 115k. We are sitting at 120. So if really this 4 billion has an actual effect in the market, it could lead into some slowdown in the upside to keep the price as close as possible, obviously, to the 115. Interesting, because we are in the beginning of October. Typically, we get those expiries by the end of the month. But actually, we can see in here what's the put-call ratio, the notional value, and we can see the max pain located right there at 115. If you're curious, for Ethereum, that's 4.2k. Obviously, that's below the current price. It's 4 billion. It's been larger than that a few days ago. But still, it could slow down the upside. Not necessarily we have to go into the actual max pain or below. And as usual, every day I ask my community, what do they want to know? Very frequently, that's what everybody wants to know, so that's great. Daniel is asking, price action has slowed down a bit yesterday. However, how long can this pump still continue without any significant pullback? And something that has been kind of the theme in the past pumps within, let's say, 1 to 2 years, is that once we start a pump, we start doing it as a ladder, and we tend to not come back to pinch the previous levels or do proper retesting. I actually remember missing a big chunk of a pump because so many signals were bearish, and that's why currently I tend to place my stop loss slightly below some areas of immediate risk. We'll look into where we have currently located the stop loss for my long, and I remind you that I'm also in a small short with the intention of scaling it up if we go into the selling wall that I'm currently seeing today. We'll cover all that, don't worry. Have you already mentioned CPR for this month? Why the range not that wide as the previous months? Well, Monday, that is precisely what CPR tracks. It tracks the volatility of the previous months, the high, the low, and with that, it does a calculation. And since last month, we didn't really go anywhere, and we ended up pretty much closing at the same price. That causes that the pivots get a lot more squash. I already covered CPR in one of the videos this week. It's really tight, the range. We just crossed the first resistance of 189 and we're sitting above it as if it was some sort of support now. If we manage to hold this, well, we could go into the next resistance at 123,770. Or if we fail, we could come back in here and test the pivots, which will cause that the CPR for October loses virginity. That will really please the shorts, I will expect. And I'm talking specifically about technical analysis in here. If you want to watch further information about the CPR model for the month of October, you should probably watch my Banana Zone video. If not, the previous one, the BTC Daily Breakout. One of them, I think I did it on the 1st of October, probably is this one. And I missed one of the news. Bitcoin jumps to 120k on soft jobs data as rate cut odds surge. I'm a little bit confused about this news about jobs, because on the other hand, we are supposed today not to get anything because the government is shut down. That nasty trick to skip any of the news, any of the metrics, which also really puzzles me, because indeed Trump wants the rate cuts. And if the job market is broken, that should be an incentive to get the rate cuts. So I don't know who's working for whom, but I'm sure that there is some manipulation going on out there. Lara is asking, I love to know what you think the weekend has in store for us, if there are any indications of what's coming. Well, definitely less volume than usual, and the best scenario for the longs is we close as high as possible. So if over the weekend we start seeing any sort of bearish price action into the downside, we can produce an insurance bullish CME gap on top of us to bring us back up for resuming the uptrend. Of course, a weekend pump could reinforce the idea of adding to my short on the same way. But typically on the weekend, we could say 4 out of 5 weekends, nothing really moves. Siri wants to know Purple Whale's action. We'll look into that. Raul Pal believes Bitcoin is now following a 5-year market cycle due to its close correlation with the ISM manufacturing index. Shall we exit in November or wait until Q2, Q3 2026? What will be your game plan? And remember, I can have an opinion. I might think that the most likely scenario is that we're going to top in November, but that really doesn't mean I know it's going to happen. I just feel like it's the current trend in terms of finishing a cycle. But I also agree that many assets in the past, including general market indices like the Nasdaq and the S&P, have been following 4-year cycles for an extended period, 2-3 cycles, and eventually that thing breaks. We've been doing 4, you can argue 5, whatever, but eventually has to break. The thing I'm not as confident to do is to say, this is the time it must happen. If it happens this time, let's be prepared for that. How can we be prepared? Well, at this time, I'm not holding that much spot anymore. My call is I'm going to go conservative with my spot. I get rid of Ethereum greenbacks on BTC from the bear market. Solana, gone. I need to get rid of my ADA, my Link, and a couple more, and I'm done with my job for this 4-year cycle to try to squeeze as much as I can from my largest spot backs. Now it's time for me to start doing some trading and just to keep a tiny bit if I really want to squeeze a bit more, like I'm doing with Chainlink and ADA. But really, with Bitcoin, I'm not an investor mindset anymore for crypto. I rather moving into other asset classes right now, which is also the reason why I'm doing separate videos for general markets that you can watch separate. And I'm going to give a lot of emphasis during the bear market. Yes, you're going to get Trading Parrot covering all asset classes in all the bear market, because pretty much no one is going to give a damn about Bitcoin for 2 years anyways, assuming we get a bear market, of course. And look at this. Strong words. We double the chances overnight to get a double cut, a 50 basis points incoming on the 29th of October. Yeah, we went from 1% to 2.2, if that's something, but impressive. This is really having an impact on the rate cuts. And as you can see, people that are looking into my Telegram channel, they have already gone straight into the charts and they already know what I'm about to say, right? On the 4-hour pinch, the top of the range, you can access these charts and this particular channel for free. If you want to get all you can eat charts, then you can go for the 3 months, 6 months, or 12 months and support the channel. Whenever we get 1,000 likes in a video, I'm gonna give massive discounts or even indicators for free, subscriptions of 1 year for free. But we really need to get into 1,000 likes, guys. We got a new reading on the Federal Reserve's balance sheet. In here, as you can see, we are now at 2.96 trillion. That continues to shrink into quantitative tightening. Aggregated open interest closed yesterday in the breakout area. So now we are in a position of looking for a retest for continuation to the upside. And I have updated the Bitcoin status. As you can see, we are at the top of the range on the 4-hour. We have crossed the first resistance on SOPR. Maybe we're gonna get another CME gap by Monday. Daily breakout is still holding and the Gartley pattern is still present and valid. It could still play out, although it hasn't started showing strong indications of starting, apart from a little bit of a small retracement from the top. Let's have a look at what I mean. As you can see, we pierced the 85 that we've been looking for from the beginning. That has been a rejection, as strong or maybe less strong than this one in here. We are far away at the moment from the support which we left at around 61. That support at the moment is 118.458. My stop loss is currently at 117.3. And I'm going to explain why I'm placing it there. There is a key critical reason to do so. Once we get into high block capital, you'll see why. This is the most bullish support. So if we go there and we hold it, we are still very strong and we can push back into 85. I would expect though that this push, if it comes from 61, is going to be the first bearish divergence. At that point, we can have a period of consolidation. That doesn't mean that we need to go straight into 107 guaranteed, but you know, momentum has peaked in here. Volatility has just confirmed printing the first one on the 4-hour. It won't be precisely at the top like these ones were not either. But you know, when your volatility is starting to go too far away. So yeah, as you can see, we have peaked in the volatility on the 4-hour, and here we are having the first P. That's not necessarily going to be the top of the volatility to the upside, because you can see that in here we still move 3K up, or for example the ones on the low end have a period of them before we reverse. That is just calling for peaks of volatility. This one calls for a peak of momentum. If we get a rejection from here and that extends into the most bullish support of 61, which is currently located at 118.458, then we could still bounce. My expectation is if we bounce from here, we are not going to make it again into 85. That means that I'm expecting to start to see bearish divergences on the 4-hour. With that, we could range a little bit. My stop loss currently is below the 61, therefore is below 118.5. To be more precise, is at 117.3 for my long. And there is a very, very key critical reason to have placed my stop loss around that level. I'll tell you later once we get into high block capital. On the daily, we still haven't played the Gartley pattern, but in order to invalidate the bearish effect from this pattern, the price really needs to go beyond the left leg. That means going beyond the previous all-time high of 124 point something. Let's say it needs to get into 125. At that point, definitely the harmonics pattern live indicator, which is free, not mine, is going to make the pattern disappear from the chart because it won't meet the specific proportions that it requires to work. Remember that it needs this sort of Fibonacci metrics to be valid. The daily breakout is still in play. It managed to put 2 days confirming to the upside. Now it's pointing down. So we should be looking into a retest on the daily. Not that it has to happen, but let's know what is the range. And we got that 56 support, which is around 117.2. So if the daily really wants to go and reverse all of that, it will have to go into that level. But today, the key level to watch comes from the weekly time frame, because as you can see, this candle is a massive green candle that came straight from the support of the bull market support band. It crosses the full range. It is above the point of control. It is above the previous resistance of 117.2. That 117.2 eventually should turn into support like we did in this area in here, but we don't really have to. We could initiate a short squeeze from here and come back way later. Ideally, this week we want to close above the highest close. Let me calculate where is that. Is to be more precise, 119.421. By Sunday, you are above that and you have achieved a higher high on the weekly. We still have the bearish effects of these two double top. So eventually the next task for the next week potentially is to cross the all-time high, but not just to cross it, but to close above these 2 weeks, to basically shout out loud that they are no longer in play, putting bearish pressure. Coming in on the weekly, we're going to face resistance at some point if we continue to the upside. That resistance comes in at 68.86 on the RSI, and that is currently located at 131.170. It's a moving target, and we do really need to consider that resistance, particularly because in the previous cycle, we kind of went 3 times to hit the level of descending bearish divergences. We could say that this one already did the job. Let me place one in here. But if that wasn't, maybe we can count a 4th one and go into 68. Now, the people that are thinking on a Bitcoin cycle that spills into 2026, if you have a strong conviction of that, what Bitcoin really needs to do in here is to break the hand of the past performance and put a breakout on a very late stage against that 68. So Bitcoin needs to go beyond 130, close on a weekly basis above that, and then, the sky is the limit. I wouldn't be able to tell you where is it going to stop because we really do not have any point of reference to achieve that. We will also require the MACD to put a bull cross in here, that together potentially with a breakout beyond 130, then you have an upside into 83, which is the top of the range. And that gives you a top of the range of 188, and you probably want to go into the kitchen and grab some napkin because that is a little bit too low to watch. And yeah, we continue with leverage squeeze, calling for, hey, too many longs. Still, we don't get a yellow signal like in here. I am waiting for one, but I'm afraid we're not going to get one because the conditions didn't mirror the same ones that we have in this leg. SOPR, Oscillator, managed to get to 104. That's a big journey from 1, and that means that we have a couple of days of profit taking around the 120K. You probably know that because we slow down in here. Is that really sufficient to call for the end of this thing from the point of view of SOPR? I will say no. It's a mild, soft, bearish signal, but I will expect this to have to do a big pinch in here into 110, 107 to really make me feel a bit uncomfortable about my long. And remember that the monthly as well requires 130 to put a bull cross right after the bear cross that we already confirmed in September with 2 bearish divergences on the monthly. So Bitcoin, in order to validate the people that are expecting Q2, Q1 on 2026, they need to do a strong job, and that is pretty much 130, guys. Volatility model says that we still have room to go to the upside to get into the resistance of 0.26. Let's see where that is in the price. At the moment, that is 143. Very, very crazy target. So from these lows, move back into the resistance that have held Bitcoin, constraining the volatility year by year, won't allow you really to go into more than 143 without actually breaking the model. And at the moment, for all of you that are into swing trading and scalping, you can see that we are on the top end of the open interest beyond 11%. Our actual reading today is around 13%. So that means that this could continue into a rally, or it could be a local peak for a pullback. Definitely not the time to enter in a long, because longs are at the moment at this risk of clearing some of their own open interest. Still not in extreme greed. We are at 63, but it wouldn't hurt if you get those 2 cups of coffees, you look for a mirror and you start slapping yourself to start considering looking for exits. I am not telling you to sell. I am not telling myself I am not selling. I have a stop loss to trail it, but I am not looking for the biggest longs. If we do a pullback, we could add a little bit more to our long if we see strength. Let's look at liquidity. Let's look at everything that is going on in the order book before I jump into recording the general markets video. Yeah, as you can see, we took number 1. Number 2 is at stake. That is 121. Then we have 125.7 and 129. That is the short-term liquidity. If I focus on what's below, which is also very important in case we get some pullback over the weekend, you're going to notice that our first liquidation is at 118. There is kind of similar liquidity levels all the way until we peak at 112.5. Of course, at 108 and 107, we still have that area of the largest pulls of the past 3 months. That is still the case, but it's always good to know when things start to take a lot more liquidity, because that could accelerate a move down if we start entering too close to that. We have achieved, we could say, 1/3 of the technical target in here on the daily towards the liquidity of 125. We have some low hanging fruit at 121 and at 122.5. After that, there is a vacuum that I will call the area where things could potentially fail, get humble, and not want to go into the liquidity. Liquidity is attractive. It is a magnet, but we don't take it for granted, and sometimes, rarely, we leave it on the table. And I'm not talking about the one at 107, because at 107 you can see that this is less than half than what there is at 125, which could explain why we left it behind. But still, very large pools have been left behind in the past without taking them. That is a possibility. On the past 30 days, now the largest pool is 110, followed by 108.2. And liquidations are still a little bit humble to the shorts, so I'm still expecting a big liquidation of shorts. All cohorts of whales currently, except for the brown ones, which are the largest ones that are still interested in the move up. Even purple ones have now massively declined in this long. And you can see that there is this selling wall forming at 125. Let's see how large it is. On material indicators, this is $75 million on Binance USDTM. Let's zoom out to see and magnify to see if it's the largest one. Definitely not the largest one ever. We have had way bigger than that. We can also observe it on Market Monkey Terminal with 125K. That is where it is. We have the immediate resistance at around 121 and the support at 119,500. That there's still decent support up until 118, but it seems like if 118 breaks, and if this doesn't really change that much, the next support is at 112.5. I have today the chart on the 4 hour, and you can see that the net longs have increased and they are at a peak at the moment. Shorts have also increased, so there is a little bit of an arm wrestling in here, and I would love to see some squeeze that puts back down some of this elevated open interest. One of them or both of them could get a bit of a shake off in the next few hours, possibly thanks to options expiring I don't know if it has already expired. Typically, it expires at 8 a.m. UTC. Now it's 10 a.m. So maybe we're going to see in the next few hours the effect of that. And wow, global longs and shorts accounts on Binance have decreased to 38. That's a huge decrease. The last time we were this low was this area in here. We were still pumping during the very little amount of longs, but eventually we peaked at 123. Something that could be helping at the moment still move the price higher is the excessive amount of negative funding rates. Again, price is coming down during a pullback, negative funding rates, and that has been helping each individual bull flag to carry on steadily. So we got two opposite forces. Of course, we have the funding rates that are negative, indicating too many shorts, too much leverage put on those shorts, and that really helps for another leg up. But with every leg up, we get less longs. So that is kind of a ticking bomb for a pullback. I have no clue at what level of longs this time. Eventually, the shorts are going to nail down the local top and they're going to produce a big liquidation of longs again. Remember that we keep going higher, and today we have 936,000 delta, which is the main reason I am in a short. Now, going back into my long, I was going to tell you where I placed my stop loss to lock in profits in case we get a correction. And since last time that approach kind of worked, because I put my stop loss here and the price retraced into the band of open interest, it could be the case that we consume fully this band of open interest that is immediately below the price. So if you have some sort of pullback on Friday or over the weekend and we go into 117,500, that's where it ends, we could have a similar effect to this. Not guaranteed. It's just my preference, right? Worst case scenario for me, it goes into 117,300, slightly below that. It tests the daily support of RSI 56, which is at 117,200. I liquidate into profit. That's a big profit. I entered at 111, so 6K up with a 3x, amazing. But if after that price wants to come back inside in here, amazing, then I take another long. But if it bounces off support and it goes straight into 130, that is something that I'm not gonna appreciate watching. But you know, profits are profits, guys. Profits are profits. I lock in another win, 0 losses in 1 year, and to me, that is always more valuable than the fun that I get to watch a long strike to the upside. If it doesn't go for that, there is one at 112.9. Of course, there are plenty of other things in between, but speaking about open interest, if it goes into 112.9 or 5 around there, it takes 466 million, or if it goes into this one, you get 546 million at 111. That is already my entry, so of course I'm not gonna keep my stop loss there, because if it comes back down all the way here, I just break even and I lost and I didn't make any decent profit. So I hope you appreciate a little bit of the chat around the stop losses. Let me know in the comments if you only watch the TA, or if you also are interested in me talking about some side things that actually is very important. Entries is just 20%, right? I can enter anywhere, but if I manage poorly my trade, it's a disaster. People lose because they don't know how to manage. Many people nail some entries, but they get greedy, they don't use risk management, it's all over the place. It's painful to watch. Fair value gaps are calling for some pullback. So if we go just into 118,600 and then we bounce into the next one, I'm good to go. If we consume all the way to 114, I lock in profits at 117, but then I can re-enter from 114 or start building as we go lower. That's the way I think. So let's do the summary. We got support coming in on the 4-hour at around 118,500. That's the most bullish support. It doesn't have to hold. Is the best we can aim for as support at the moment to continue to the upside. If we pinch below, we can still go back up to the upside, but we could do it as a revenge rally. Then we need to adjust our expectations, get some bearish divergence incoming. We already fully achieved the target of the inverse head and shoulder. There is some profit taking that started to increase on the SOPR. I still think that we can go higher, guys. We haven't broken really anything, not even on the 4-hour. But we are entering on a weekend, so we need to take considerations on the CME gaps that we could form, whether it's going to be a bullish or a bearish one. We will cover all of that in the next videos. I am running the long. I still have it. I have my stop loss placed at 117.3. I already explained in the long video everything. There is still the Gartley pattern in play. It could cause some damage. Fair value gaps are heavily loaded on the lower end, but we still don't break anything. The star of the show today is the weekly time frame. If we can get a highest closing price on a weekly basis, that is phenomenal. That secures an increased chance that we can put an all-time high and ideally end up closing higher than the highest close or the highest high. That could bring 130K, which is the weekly resistance. If we go beyond that, we are talking about Q1, Q2 becoming a potential scenario of an extended bull cycle into 2026. Personally, I don't think that's going to happen, but who am I? I don't know anything. I cannot forecast a single crap. I just think that is less likely. If I'm proven wrong, I will rally and I will take advantage of that. I don't need to know if it's going to happen or not. Thanks so much for watching the video. Hit the like, subscribe, write down comments, and stop wondering yourself why the channel is stuck at 47,000 subscribers. It's because you're not hitting the like, so do it consistently. Thanks so much for that. I'll see you in the next one. Bye-bye.